I suck at position sizing. Seriously, that's the one thing I need to fix immediately. See, I've got my win rate right. My batting averages are actually improving, but my trades, they are tiny. Chicken shit small positions that barely move the needle on my portfolio. And I know that you guys are in the same boat just like me because I've had 2-3 subscribers comment on my channel, bro, can you make a video on this? Yep, they call me bro. So I did. In this video, we are going to be breaking down 3 simple indicators that'll help you size your trades better. So when your winners do actually move, you make the most out of your portfolio returns. Alright, so these are the 3 indicators which we are going to use to allocate better and allocate more. The first one is RDX, the second one is Donchain, and the third one is new highs. So the first one is RDX. Now yes, it's a technical definition, so let's simplify this by looking at charts. So out here, let's get this simple breakout and also this mini breakout out here. Now the RDX score is pretty simple. Higher the score, the stronger is the strength, and lower the score, the weaker the strength. If it's like 3, 4, 5, 5 is the highest number, then the strength is really strong, where you can allocate more. And if the numbers are going into minuses or 0, that means it's time to get out or not even enter the trade or just to sell off your position completely. So let's go with this example. There was a breakout out here and the number was 4. And we also see volumes out here. We could have taken one position. Now on the second candle, the number was 3. So out here, we could have been careful, but because I had mentioned in my earlier video, if you're just starting to build a position, then it's okay. You don't need to trail those stop losses. You can keep a minimum stop loss of 8% or something. Then there was again a number 4, and then again there was a number 5. Now here, you could have allocated more. Then again, on the next very candle, there was another 5 number and also a new high. Here, you could have added another position. Here as well, now this is a doji candle. Like usually you would be careful, but again, because it's making a new high, you can still add. Out here, there was again 5. Remember, we're still in that number of 5, which is a good high number, which is also indicating that the trend is strong. So we're going to keep continuing holding our position. Again, there was a 5 out here, again a 5 out here. You could have added here, you could have added here, and so on and so forth. Till again, there was some weakness. But out here, this was a massive move out here, which was almost 100%. Again, in my earlier videos, I've told you that you can sell into strength. Here, you could have maybe trimmed a little bit of your position, but since the number was 5 again, you could have kept it, or you could have trailed your stop losses out here just to be on the safer side. But this continued further. If you would have still held the position 5, 5, again a new high, you could have added more out here, out here, out here. This one trade would have given you enough returns for the whole year. So this is how the RDX indicator works. Now let's see how the numbers start decreasing and when you could have actually removed it. So we see 5, 5, 5, 5, 5, and here we see a 4. So out here, you could have been a little bit careful. And if you felt that, okay, maybe have captured a good, long, juicy chunk of a move, then you could have reduced your position out here. Or the next best position to be reduced was out here. So out here, you could have then been a little more cautious, reduced your position. Even this one, sorry. This one is the one where you could have reduced your position when a number 3 came after a couple of 4s and 5s. There you could have reduced your positions. So you would have captured this nice move, and out here, you would have gotten out with a good amount of profits. Or what you could have done is you could have placed a trailing stop loss out here. So suppose your stop loss was somewhere out here and you could have just trailed it after seeing the number 3, and this would be your exit. So it's as simple as that. Or if you would have just continued, then automatically you would have exited out here, either on the number 2, where again the number has decreased. So you would have reduced the position, or at number 1 or at 0. So out here, when the numbers start decreasing, you can start reducing your position. And when the numbers are in a strong uptrend, then keep adding confidently because the trend is really strong. So this is RDX for you. Out here, I'm going to take another example because this one was something which I had put in my last trade on how I had lost one of my position just because of a stupidity. I'll show you what I did as well. I had a position which I had made on the breakout, and here at this particular position, there was a pin bar candle, which made me think there might be some weakness, and anyways, the market was not behaving nicely. So I decided to trail my stop loss from here to here, and immediately on the next day, my stop loss was taken out and the stock moved around 13 to 14% on the upside. So, but if I would have just used the RDX, then I would know that, okay, the trend is still strong. My allocation is not that much, so I can still afford to keep that stop loss out here and not even worry about, because even if it goes down from here, because my allocation is minimal, I could have just taken that loss. But on the flip side, if my position was not gone out here, I could have easily added out here added one more position out here, added one more allocation out here, and maybe on this, if I thought it would be a good exit or if I have captured good enough of profits, I would have exited. But again, this is also a number 5. That means it's still indicating that the trend is strong. And out here, again, there was a big massive move, which was 16% or something. If I was allocated right, this would have been a nice winning trade for me. And just this little one trade would have changed the face of my portfolio. Let's move on to our second indicator, which is the Donchain. So the example which I'm going to take out for you is solar industry, something which I had traded. So let me just remove this first. And right now this is on, right? So we have removed the RDX and the Donchian indicator is on. There was a breakout. Here we can now switch on our Donchain. So the thing with Donchain, first of all, I got to explain. Now you see how this thing moves, how this line is moving, right? So every time the line crosses a solid candle, you add. So every time a line, again out here, there's a solid candle which is crossing the line, then you add to this. Let me show this to you by an example, by just drawing it on some paper. Let's assume we have these green candles, maybe this is a little bit small, and then there's this big candle, and then there's a bigger candle out here. And suppose we have this Donchian line which is moving like this. So every time the candle crosses this line, like it's intercepting this line, what you can do is add to this position. So let me just again go back to the chart so it's more clear, but you get my point, right? It should intercept this line out here. So let me just go back to the chart. So out here you can see this one is intercepting the green candle. A solid green candle is intercepting this line. Another solid green candle is intercepting this line. So if you don't want to add on the RDX, you can use Donchain, which is a good way to add your positions as well. So out here you could have added one position, and out here you could have added one position, and out here also you could have added one position. Only on this candle you could have then made a decision whether you want to get out of the trade or not get out of the trade. So suppose even if you do get out of the trade, the next trade would come on this breakout where you could have added one position out here and one position out here. Again, this is another place where you could have decided maybe if you want to get out, but if you would have held this position, because this was just a normal correction with low red volume candles. So out here you could have easily captured it. Even if you would have added two positions out here, you could have nicely captured a good chunky move of 29-20%. So that is something how you play a Donchain. Donchain is again that simple. Let me show you another breakout, because I was in this particular trade, and out here you see that the first candle, it did not cross that Donchain line. So here you don't add a position. Here also you don't add a position. But once it climbs up to like 10%, you could have safely added one position out here. Then you could have added one position out here. And you could have captured this nice move out here too. And there were no additions to the positions out here. So this is more of a modest approach, but it's a nice approach. I like this approach as well. And if you do combine it with RDX, even better, because out here you can use RDX and see, okay, there was a 5, add. There was a 5, you could have added out here. There was another 5, you could have added out here. So this all, this would be like an aggressive allocation using the Donchain as well and using the RDX too. Maybe you could have your own combination where you are basically adding more if two of these criteria are being met as well, where there's a number 5 and where the Donchain is crossing that level as well. That could be another way to aggressively allocate. That's how you play a Donchain. Let's move on to our last indicator. Now the last thing is not really an indicator. It is just adding on new highs. So out here I have created my own indicator where I just get pointed out whenever a new high is created. But yeah, this orange dot is just basically a new high. And that's it. This is how simple the new highs are, where you add to a new high. I am going to skip this technical definition and I'm going to go straight to the charts. So this was a trade which I did in the last quarter. My position was a little bit late out here on this big candle, which also made my stop loss a little bit bigger. And this was a red candle which I was afraid to add on. But once it started moving up, these were again the little candles which I was afraid to add on because there were such weak candles. What I could have actually done is added out here, taken my second position out here and waited. I could have just arranged my stop loss in a way that I could have incurred the least minimum amount of loss. And out here on the new high, the orange dot, I could have added one position out here, another position out here, 0.5, 0.5, 0.5, 0.5, and I could have been allocated 3%. And out here, when I did see there was a little bit of a weakness or a hammer candle, I could have maybe gone to looking at the RDX, or maybe I could have just trailed my stop losses to a point where after my third tranche, even if the stop loss would have hit, I would have been profitable. And this is is a really good example, because sometimes when you're looking just at the candles, you're getting scared because the institutions or even the buyers could be just adding up slowly. And you can see like there were back-to-back volumes out here, not so good volumes. But again, if you would have just added on these highs, I could have captured a good trade. Instead, what happened was I was not able to allocate, and also, yeah, I just waited for it to just take my stop loss out with a minimal amount of profit which I earned. So that is the thing. If you're not allocated well, that's just sad. So out here, let's also put the RDX. Let's put the RDX score out here. See how cool that is. Like I could have just waited, and maybe on this point where it gave me a number 4, I could have then started trailing my stop losses, because that would be a hint that, okay, the market is losing its trend. And maybe since I'm allocated fully into this, I can start peeling off the position. I can start reducing, or I can start trailing my stop losses. So this is how you can use the RDX plus the new highs. You can even use a Donchain on this. The whole game is about position sizing, and if you get that wrong, then it's just going to be subpar returns. It's not going to be a super performance on your side. I know it's a little bit scary adding on the highs and adding to position when it's moving up, because you always have this little tiny devil at the back of your head telling you all the time that, oh, it might just reverse. Oh, you have the profits, maybe just book it. Oh, I don't know how a devil sounds like, but yeah, the devil in my head does sound like that. So I hope I have added some value with these indicators. There's something which I am also going to use on my trading setups from now on. And yes, I will also update you on how these trades have gone every month, so that you can learn, I can learn, and yeah, we can all profit from this. So remember, RDX, Donchain, new highs, and if you like this video, press a like. Hit that like button, comment. I really love talking to you guys. And of course, if you're a new viewer, subscribe. See you in the next one, guys.